Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by taxbuddy.com, a leading tax filing portal in India. US markets shot up once again. Yesterday, Dow was up more than 300 points, and day before yesterday also it was up more than 300 points. And just ahead of Fed meeting, there seems to be no fear. And forget about the up move. Yesterday, S&P 500 shot up above 4,000. That's one significant thing. Second significant thing is that the US VIX crashed almost 12%. I think 11.9%. The VIX crashing, usually VIX crashes after the event. And before the event VIX crashes, which means that they are not expecting anything nasty or anything negative surprise from the event. So going by this, we can expect today's Fed event to be a non-event, or at least there can be something good, but there cannot be something really very bad. Asian markets are following the US markets, and all the markets are higher. Hong Kong market is higher by more than 2%. But however, what to say about our market? SGX Nifty is still struggling around yesterday's closing level. So the reason is very simple, and FII selling. Yesterday, despite market recovery, FIIs have sold for nearly 1,500 crores. So maybe I will come out with a separate video about this FII selling and what is their intention, what is the impact, and where our market can go. But yesterday's recovery was basically seems to be a short covering. In fact, yesterday around this time, I was talking Reliance, Bajaj Finance, Bajaj Finserv, all these are bluest of blue chip stocks. They've all fallen like 30-40%. And yesterday, and all these three stocks came under severe short covering. And all of them shot up more than 2-3%. So definitely some people, after seeing the 52-week low, some long-term investors are entering into Reliance Industries. So that has led to short covering. Of course, there are some news about this windfall tax, but that is, in my opinion, that is actually immaterial. So yesterday, the banking stocks has outperformed. And if not for banks and Reliance, yesterday Nifty would have ended in red. So that is why the SGX Nifty is not reacting positively, despite the entire global markets are positive. Look at the market setup. Today it is 22nd. Look at from last 15th February. Continuously there were 9 red candles on a day basis, which means that a market open closed below the opening price. For 9 consecutive trading sessions, market closed lower than the opening level. So that is why, SGX Nifty is so reluctant to open higher. Then after that, few days of some recovery, and then again selling started. And as of day before yesterday, there were continuously 8 red candles. So which means since February 15 to today, it's about 1 month, there were 9 days continuously markets closed lower than the opening. After that, continuously markets closed lower than opening for 8 trading sessions. So 9 plus 8, 17 trading sessions. So this is the reason why FIIs are holding huge short positions. Yesterday the markets recovered, but despite that, FIIs did not square up their short positions. FIIs are still holding 91% short position in index futures, and which is an historic high, we can say. But however, one good thing is that although they are holding short position, but they are little bit worried that markets may recover. So they are actually hedging through the options. So that is why yesterday you see there was a huge amount of put writing as well as huge amount of call buying. let us say somebody is short in future, what they will do, they will just buy a call option so that, in market shoots up, the call option will save them. The profit from the call option will compensate the loss in the futures. But again, what these people may do to finance that buying of call option, they might be selling a put option. So that could be the reason why there was a huge put writing and huge call buying, and that becomes the hedge for the future short position. So I can give one suggestion. So but again, I'm not a SEBI registered person, so this is just my view. I still feel that with that thing, global markets are turning around. So the Nifty is likely to move higher during the next 1 or 2 weeks. And even if it falls, so it's not likely to fall below 16,800, because Nifty went to 16,850 first time. Second time it went up to 16,828 or something, 828 or 823. So what I did actually yesterday, or maybe adding more positions today if the markets open flat, I will buy 17,200 call option. So in case market goes higher, we will make some profit. But in case market goes down, that option will go to zero. So how to take so much risk? So to finance that, I might be selling 17,300 call option. So you buy 17.2 and sell 17.3, that become a bull call spread. But still, the premium that you are paying for buying 17,200 will be higher. The premium that you are getting by selling 17.3 will be lower. So to collect that difference, so I will be selling 16,800 put option. So basically, it will be a neutral strategy. No money is given, no money is taken. But as long as Nifty closes between 16.8 and 17.2, there will be no loss, no profit. But if Nifty moves higher, then there will be some profit. And the profit will be a maximum of 100 rupees per share. That will translate into about 5,000 rupees per lot. So 5,000 rupees per lot, that's only 1 week. So this is a good risk reward strategy, I'm thinking. But of course, things can change overnight, and especially after the Fed. But somehow I feel that the VIX will collapse, and Nifty, if you look at carefully, Nifty is becoming long if Nifty crosses 17,200. So if Nifty crosses 17,200, so that is when the real short covering will happen. So market can quickly move to 17,300 or 400. So that is the actual view. Of course, the view can go wrong. We will keep a certain stop loss in our mind. So once we lose a certain amount, we will exit the positions. So I'm not here to tell you exactly what is the stop loss. Okay. So if you look at the market setup, and we can say still we are not out of the woods, but there is a possibility very soon we might, in the short term, 16,820 to 850 visited twice. So we can say it becomes a double bottom. And in the longer time frame, as I told you, in 50% Fibonacci retracement around 17,000. So all these, so we have been spending for about last 1 week around this area. So once we recover significantly, the actual one will be 17,255. Once the Nifty crosses 17,255, so we can assume that market has already bottomed out and markets can move higher. But however, I don't know how many FIIs are listening to this, and there will be definitely some intraday dips by selling by FIIs. So this FII selling is not going to stop anytime soon. So that's my view. So anyway, so let us see today. I feel that Nifty will take support around 17,000. That's because 17,100 and 17,100 and 17,000 put options added huge open interest. I'm assuming 17,100 put option being sold by the people who are holding future short positions as a hedge. So therefore, I logically don't look at the highest open interest. Mostly I look at the second highest open interest. So that is 17,000. So we can expect Nifty to trade between 17,000 and 17,200 today, but usually Wednesdays will be highly volatile. So SGX Nifty, where it is still struggling. So last time I checked, yeah, and now we think it is slightly up, like 10-15 point is higher. So the good thing is that SGX Nifty is opening around yesterday's high. But yesterday's high here, I think 17,183. But then there was a small dip in the last 5-10 minutes. So that's a technical in nature. So let us hope market resumes its rally today, and soon Nifty crosses 17,255. So hope you enjoyed watching this video. Thank you for watching.